whatever's wet over there. No, I don't know, but scrub it again. I was like, why can't I see myself? We can conquer the world. Yeah. Where did we leave off here? Wizard tiles, candlestick, market structure, trading strategies and tactics, pin bar, candlestick strategies. Okay, 70. Conclusion. Hello, hello. How you doing this evening? We'll get started at 8:20. Hello, hello. We'll get started in 3 minutes. Mm-hmm. No. Yeah. Hi, Simba. How you doing? We'll get started at 8:20. GU is playing me right now. Beautiful trade. The one that's about to hit stop loss. It's 17 pip stop loss. I was originally in a sell and I let price mess me up. So we've been in this sale since, where was it? Right here, earlier at 2 o'clock. And price came back to this area, which I'm trying to see what it is. 50%, right? Price closed on top of it. And then it came back into this gap and went a little higher. Then it rejected. So I'm like, oh, that was a hard liquidity run. So now I'm going to wait for price to pull back and I will re-enter the sell. But right now, everything is literally pulling back on me. GU came inside of my CRT range, left a gap. We entered at our gap. It's a 12 pip stop loss. So that's the thing that I love about the ranges that I trade. My stop losses are never bigger than 25 pips, if that. So recovery is always easy. All right, guys, what time is it? It's 8:21. We're going to go ahead and begin. Hi, if you are new here, my name is Sierra, the Wealth Empress. I am your day trading, credit, and funding strategist. All right, we are on day 5 of our beginner's course, and we are on page 79 of the Candlestick Trading Bible. Day 1, we went over some candlestick patterns. We went over our zones. We've gone over patterns, zones, and a couple other things. I can't remember off the top of my head. So the videos for day 1 through 4 are on my YouTube, and my YouTube is linked in my bio on our link tree, okay? All right, so we're going to get started with day 5. And we're going to start here because we left off here last week on our higher time frame zones, okay? So, trading strategies and tactics. Remember, we're not trading this exactly. We really started this just so that you guys can learn how to identify your price action candlestick patterns, okay? And then he went over the zones. I trade different zones, so we did talk about that. All right, so now we're going to see what he has to say about trading strategies and tactics, and I will put in my input, okay? I want to go to a different watch list because I don't want to mess up any of my weekly drawings, and we'll just do GU, all right, for our chart that we'll do any examples on, okay? All right, let's get started. Trading strategy and tactics. In the last chapters, you learned 3 important aspects of price action trading. The first aspect is the market trends, okay? So we learned how to identify an uptrend, a downtrend, and when price is consolidating, okay, which is very important. You know how to identify the market trend using multiple time frame analysis. You know how to differentiate between trending markets and range bound markets, and you understand how each market moves. If you don't and you miss those lessons, again, they're on YouTube. The second aspect is the level. You learned how to draw support and resistance, and remember, we don't trade support and resistance, we trade ICT concepts, all right, which is we're mainly focusing on our fair value gaps. And how to draw trend lines. We do use trend lines. And this skill will help you better enter the market at the right time. So having the right zones paired with the right price action chart patterns, okay, will help you trade at those zones. The third aspect is the signals. You have seen different candlestick patterns. You understand the psychology behind its formation and the message they send you. These 3 aspects, which are the trend, the level, and the signal, are what we will use in our trading approach to make money trading any financial market, okay? And these 3 aspects are confluences, right? So if we have our higher time frame and we're trading our weekly CRT, one of our confluences would be price traded outside of the range, right? Another confluence would be price came inside of the range. And then our third confluence would be price broke structure. And then we would look for our entry on that fair value gap that broke our structure, okay? So these are called confluences. These 3 aspects, which are the trend, the level, and the signal, are what we will use in our trading approach to make money trading any financial market. I mean that when you open a chart, you will try to answer three important questions: what the market is doing, is it trending, consolidating, or is it a choppy market? If it is trending, you know how to identify it as an uptrend or a downtrend. If it is ranging market, you will see that it is trading horizontally, okay, which is sideways, between two boundaries, okay? And if it is choppy market, you close your chart and you stay away, all right? What are the most powerful levels in this market? If this market is trending up or down or it is ranging, you will try to find the most important, we're just going to say zones. I'm not going to say support and resistance levels. These levels are the best zones where you can buy and sell the market. What is the best signal to enter the market? The best signal to enter the market means the right time to execute your trade, and this is what you'll learn in the next chapter. The pin bar candlestick pattern strategy. All right, I love the pin bar. It's one of my favorite candlesticks that I look out for. Okay, so the pin bar candlestick is one of the most famous Japanese candlesticks. It is widely used by price action traders to determine reversal points in the market. In this section, you will learn in detail how to identify potential pin bar signals and the conditions needed for high probability setups. A pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection and indicates that the market will move in the opposite direction. And if you're not in the free Discord, the link is in the bio, and I have the pictures of all of our chart patterns, okay? And this is the sell version of a pin bar. It's called the Gravestone Doji. And this is the buy version of the pin bar. It's called a hammer, okay? A pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection, okay? And it has to show rejection at a zone, not just anywhere on the chart. Rejection at a zone, okay? It shows rejection and indicates that the market will move in the opposite direction. The area between the open and close is called the real body. All right, so it's talking about this right here, right? That's the body, okay? Price opened here, price closed here. A bullish pin bar is known for its lower wicks, and the bearish one is characterized by the long upper wicks. The color of the candlestick is not quite important. However, bullish candles with white real body, and that's just because they're using white and black candlesticks, okay? White real body are more powerful than candles with a real black body. On the other hand, a bearish pin bar with black real bodies are more important than the ones with white real bodies, okay? So it's showing you the bullish pin bar and then our bearish pin bar. So if you know on a chart, right, you'll have two different colors for your sell candles, and mine are pink, and then buy candles, mine are black, right? So let's see. This is a pin bar, right? But it wasn't at a zone. So they're saying, right, if the pin bar closes pink, which is my bullish candlestick, it's more likely that price is going to push up, okay? And if we had a bearish pin bar here and the candle closed black, it's more likely that the price is going to push lower. But remember, this is why it's important for it to be at a zone. We don't have a zone here. Price came down it pushed up and then price came back down and then finally moved up, okay? So you want to see these patterns at our zones. How to identify pin bar candlestick setups. To be honest, quality price action setups don't exist in the market because you will see that sometimes you can find a high probability setup, you feel very excited about it, and you take your trade with confidence, but at the end, you will be frustrated because the signal fails for unknown reasons, okay? This is why risk management is important. That happens a couple of times because the market doesn't move due to pin bar formations. What moves the market is the law of supply and demand. Let me give you an example. If you identify a quality pin bar candle near a support key level in an uptrend market, this is a powerful buying signal to take. You shouldn't ignore it, but if the amount of money that buyers put in this trade is less than the amount of money that sellers risk in the same trade, the market will not go in your predicted direction, okay? So they're saying if the amount of money that buyers put in this trade is less than the amount of money that sellers risk in the same trade, right? So if the buyers aren't putting in as much or more than the sellers, then the buyers fail in the trade, right? So the more money that's put into the market in that direction, that is what drives price, okay? So they're saying if the amount of money that buyers put in this trade is less than the amount of money that sellers risk in the same trade, then the market will not buy, okay? So buyers have to put more money in for the market to buy. Sellers have to put more money in for the market to sell, okay? If the signal fails, it doesn't mean that your analysis is wrong or pin bars don't work. It is just because the market didn't validate your decision. Therefore, you accept your loss and you look for another opportunity, okay? No trading system is 100% fail proof, right? Risk management is a strategy within itself, okay? So you want to have your strategy for entering trades, but you also want to have your strategy for managing your risk so that you don't blow your account every time a trade hits stop loss, okay? Because stop loss in TP is a probability thing, okay? Trading is a probability, all right? Which is why you have to manage your risk. You may ask yourself, why should we look for quality pin bar setups if the market doesn't respect them? As you know, trading is a game of probabilities. There is no certainty. This is why you should evaluate your pin bar setups from multiple angles. And the fact that you are looking for quality setups means that you are trying to put the probabilities of success in your favor, which is the right mindset of successful traders. To determine whether or not a pin bar is worth trading, this price action signal should respect the following criteria. The pin bar formed in a bigger time frame, such as the 4-hour or the daily time frame, should be taken into consideration because if you look at smaller time frames, you can easily spot lots of pin bar signals. These setups should be ignored because smaller time frames generate lots of false signals. Okay, so before we go on, I disagree with that, right? So I'm going to mark up my fair value gap areas and we're going to look for a smaller time frame pin bar. It doesn't matter the time frame, the zone is what matters. Okay? So I see a pin bar here, but my zone was here. My zone was here. I see a pin bar here, right? But that didn't hold up, okay? This is GU, we're not analyzing at the moment. So the thing about smaller time frame entries, we'll go over to NAS. All right, so we'll come over here on OddCat. We're currently in a buy on OddCat, right? I was waiting for price to come back to my zone, okay? Where we talked about our zones, our fair value gaps, right? Price came back to my zone. You see it gave us a pin bar right here on the hourly. So now let's come over here. The thing is, you want to look on the lower time frames for the same thing that you look for on the higher time frames, right? Which is a break of structure and a pullback into our gap, okay? All right, so this is how you get your sniper entry is a pin bar, a candle with a long wick. Yes, please join the Discord, okay? I put all of our candlestick patterns in there. This is a bullish pin bar, all right? And this is a bearish pin bar, okay? All right, so as you can see over here, we got a pin bar, right? You could have entered here at the high of that pin bar and not got stopped out and put your price underneath it. But the better entry is waiting for price to break your structure on your lower time frames, okay? So this was our last structure point here, okay? That took us down to our last low on this hourly on OddCat, right? So now I want to wait for price to break this area and create a fair value gap for me to get in. All right. So price broke my 1 minute structure. It created a fair value gap here. Price did not respect that fair value gap because price did not pull back to 50%. Okay, so now I just want to keep trailing my gaps. This is my next gap. All right. Price came back to 50%. Now, price came back to 50%, but it traded through it. It did not reject off my 50%. So now this is when we wait for price to get back on top of the gap, okay? Price got back on top of the gap here. You could have entered here and move your stop loss below this wick and below the candle that created your gap. All right. And as we can see, price has not come back to this area. it hit our TP here, which is some sort of zone. I just know because it's my black line, okay? So it hit TP there. All right, now price came back over here another day. We're back at this zone. And again, you can do the same thing at this zone, right? We want to find our last low. This was the area that came to our last low. We want to wait for price to break this structure. All right, price broke this structure. Now I want to start identifying my fair value gaps. I have one here. Price did not come back to 50% of this zone. Now I have one here. All right, price came back to 50%. It traded underneath. Now, when you get a big candle like this, right? It's 5-6 pips, but it's a lot on the 1 minute. And it created another gap. You don't want to enter at the top of these candles. You want to let price come back again into this gap, okay? Price came back to the 50%. You could have entered here and put your stop loss at the low of the candle that created the gap. As you can see, price did pull back a little further, but it did not hit your stop loss. And then again, TP got hit, okay? So this is how you get sniper entries. You let price get to your higher time frame zones, and then you wait for price to show you structure on the lower time frames, okay? Because if price was moving down to come into these zones, then you want to get a 1 minute break of structure, right, to enter it so price can buy, right? And then if price was buying to get to your zone, you want to wait for a 1 minute break of structure so that price can sell, okay? So that's why I disagree with the lower time frame pin bars, okay? Especially on NAS, okay? Especially on NAS. You know, Traderholics, I'm tired of you today. Have a good day. I don't. You guys, the block party is real. If you want to be here and learn, then, I don't need any crazy comments. And this person came in here today. This is the second time talking about my voice. If you don't like my voice, just don't tune in. There's plenty of other people that you can learn from. But then again, is there really? Because who's really calling out trades on live and going over candlestick patterns for you in zones, okay? So you get so nervous trading anything, hour charts, anything below the 4-hour charts, it moves fast. It does move fast, right? I mean, that is what it is. A candlestick on the 1 minute is every minute. But price action is price action and structure is structure regardless of our time frame, okay? I used to get nervous too. I used to, there was no way that I was going to touch Nas on the 1 minute. And now I'm trading Nas on the 1 minute. It just takes practice, right? With anything with trading, it just takes practice, okay? So don't be afraid. Start out on the time frame that you're on and then slowly move your way down, right? That's all it takes, okay? No rush. There's really no rush. And then even if you don't want to go to the smaller time frames, my suggestion would be with these fair value gaps. Now you're just going to have to enter at the gap, right? So here on the daily, I'm waiting for price to come back to this 50%, right? You'll have a wider stop loss because our stop loss is going to be at the bottom of the candle that created the fair value gap, right? You have a wider stop loss, but you can just set your alert or you can set a limit and then just let price enter you on that limit, okay? If it hits stop loss, it hits stop loss, but at the end of the day, your risk to reward ratio is going to be bigger. So when your TPs hit, it's going to um, make up 3 times, 4 times, 5 times for your loss. Okay. So it's okay. You don't have to come down to the smaller time frames. You can stay on the higher time frames. Okay. All right. So that's what we're waiting on UJ though. I just had to do that for demonstration purposes as far as these fair value gaps in these zones in your entries. Okay. Thank you, Katura. Katura? Is that how I say it? All right. So where did we end off at? Okay, let's start here. As you know, trading is a game of probabilities. There's no certainty. This is why you should evaluate your pin bar setups from multiple angles. And the fact that you are looking for quality setups means that you are trying to put the probabilities of success in your favor, which is the right mindset of successful traders. To determine whether or not a pin bar is worth trading, this this price action signal should respect the following criteria. The pin bar formed in bigger time frames, such as the 4-hour or daily time frame, should be taken into consideration because if you look at the smaller time frames, you can easily spot a lot of pin bar signals. These setups should be ignored because smaller time frames generate a lot of false signals, okay? So we just combated that. We don't want to just look at the candlestick pattern alone. We want to look at the candlestick pattern paired with our zones and our break of structures, okay? All right, so it's giving us a chart that says CAD CHF daily. And it's showing you a pin bar and then price moving up, right? Which is a lot of these charts that they show are really unrealistic, right? Because we literally just looked at a pin bar candlestick pattern that was like in the middle of price and it didn't just push up. So here's a bearish pin bar. So I guess, I mean, price did push down, but what else did it come into? Our gap. We had a fair value gap right here, right? That's why it played out. These candlestick patterns at these zones, right? And then this pin bar also created an evening star, our bullish candle, our doji, our bearish candle. Okay, and then it also created another gap. See that? And then price dropped. So our fair value gaps are or order blocks, whichever one you can spot the most. But I like fair value gaps better than my order blocks. Okay, so I pay more attention to my fair value gaps. All right, a lot of the times you'll find a fair value gap next to an order block. So, like right here, this is a bullish order block, and this is a fair value gap. Yeah, I love FVGs. They've that and Romeo CRT range has really changed the game for me, right? All right, so it says the pin bar formed in line with the direction of the market is more powerful than the one which is formed against the trend, which is true, right? Because you want to follow the trend. If you can identify, you want to follow the trend unless you have a break of structure. I'm going to put that, okay? So a break of structure is when price is changing trends, okay? If you can identify a clear trend, that means that you know who is in control of the market. The formation of this candlestick pattern with the trend makes it so effective. See the chart below, okay? So they're saying pin bar, the trend is bullish, so price continued. We have bearish pin bars, right? And then another bullish trend continues. So they're saying in an uptrend, ignore bearish pin bars, right? The only thing that I say about ignoring them, right? Because you can have an uptrend, But if price breaks structure and then you get a bearish pin bar at a zone, right? We don't want to ignore that. This says the daily time frame. So they would be more powerful on the daily, right? But at the end of the day, on the daily, you would not want to enter on the high of a pin bar because as you can see, this one traded back into it, right? So if we remember our candlestick patterns and how price closed, this is our previous candle, right? Price opened where that last candle closed, price pushed up, and then it pushed down, and then it closed here, right? And so this one opened here, price pushed up, price pushed down, and then it came back and closed here. So now our next candlestick pattern opened where price closed, and then it pushed up, okay? So sometimes we want to wait to see if price is going to come further into that pin bar. Is price going to trade into that pin bar and then give us our move? All right, as you can see in the chart above, bullish pin bars that were formed in line with the uptrend work, and they should be taken into consideration. But the bearish ones that were formed against the trend should be ignored. The anatomy of a pin bar is important as well. You have to make sure that the candlestick is a pin bar by looking at the distance between the real body and the tail. Okay, so they're talking about this is the body, that black part, and then this is the tail, okay? The wick. Pin bars with longer tails are more powerful because the wick is just showing us rejection, right? That's all it's showing us is rejection. So let's see if we can find, okay. So we have a pin bar here. It's small, but it's a pin bar, right? Right here. It's showing us rejection, although this didn't quite touch our zone until this candle. So we got rejection, and then we got another candle that showed rejection and gave us an engulfing candle. All right. Then price came and broke our structure, right? Which is what we want to see. With a fair value gap, we got a gap here and a gap here. So now you just determine and you wait for price to tell you which gap it's going to trade lower from. All right. So price didn't touch this one. It came close, but we closed underneath here. Okay. Price closed underneath it, dropped down, then came back and retested structure. Okay. This time frame is the hourly. Okay. But time frame doesn't matter. I don't want y'all to get stuck on time frame, right? Because you can trade this on the daily, you can trade this on the weekly, the monthly, the 1 minute, the 5 minute, the 15 minute. I want you to look for your candlestick patterns and look for your zones, okay? Look for your zones, look for your candlestick patterns. And then at your zone, price will tell you where it's going and what it's going to do, regardless of the time frame, right? Does the color matter? No, because everybody has different, colors on their charts, right? You just need to identify what your sell candle and what your buy candle is going to be on your chart, okay? All right, the psychology behind the pin bar candle formation. Pin bars are formed when prices are rejected. This rejection doesn't indicate a reversal signal because this price action setup can form anywhere in your chart. Remember, it can. We want to look for it to form in our zones, okay, which is our fair value gaps or our CRT levels. And remember, our CRT levels on our currency pairs is either a monthly level or a weekly level, okay? And then on indices, it's either an H4 level, a daily level, or an H1 level, and H is just hourly, so the 1 hour, okay? The most important areas to watch when trading pin bars are major key levels, such as we're going to say zones, supply and demand zones, and moving averages. There is no way that we're going to add moving averages, okay? Indicators are lagging in price, okay? We want to follow our candlestick patterns and our zones to follow price action and not rely on indicators, okay? Supply and demand zone is exactly the same as an order block, okay? The formation of this candlestick chart pattern in these levels give a clear idea about what happens in the market. If the rejection was near a support level, for example, this is an obvious indication that the bulls are more powerful and they are willing to push the market to go upward. Okay. So they're saying if the rejection was near support, support, is the floor, but we're not doing support. Okay. So if it is on okay, this is perfect. This is a bullish fair value gap. All right. I can't say it's support because support is like where price is like equal, right? They'll want you to say, okay, you pull out your horizontal line and you mark support up where price is touching that area several times. As you can see, we don't want to trade support because support is liquidity. There's always going to be a run on support or a run on resistance, and then price will come down and show you the real move. Okay, that's why we don't trade support and resistance. So currently, this area right here on our 1 hour, this black line right here would be considered a support and resistance area or a support area. The support is floor, resistance is ceiling, but that's not important, okay? But this would be considered a support area. I know that that area is going to get ran because I have a fair value gap right beneath it. So this is where I want to buy, okay? A fair value gap is when the market makers or the banks, they get into the market and they put so much money into the market that they leave these gaps, right? So they put so much money in the market that it pushed price all the way up here. So that shows me that they want to buy. Now, they leave positions open to where they come back and they pick up some more of their money and then they continue in the correct direction. All right. So we want to enter here when they come back to the market. So currently on UJ, I'm looking for price to come here. All right. And then I want to see price come up here into this weekly fair value gap, which is this purple line here. Okay. So that's the trade that I'm looking for on UJ. So I trade from fair value gap to fair value gap or from fair value gap to 50% of my weekly CRT. This is UJ. And as you can see on 50% of my weekly CRT is inside of this fair value gap. Okay. All right, so it's showing a support level, and then even here on the chart, you can see we had a fair value gap. This was a valid zone, which is why we got our pin bar signal, and then price moved higher. Now, this is what I'm saying about entering at the top of a pin bar. You see how this candle moved further back into that candle? So although you get a pin bar signal, you don't really want to enter at the top. You want to go to your lower time frame and find a gap within this candle. Now, if you're on the 1 minute, then yes, it's okay to enter at the top, okay? But again, you just want to wait for your breaker structure. If the formation of this candlestick occurs near a zone, it indicates that the bears reject price and prevent the bulls from breaking this level. So this means that sellers are willing to push the market down, all right? And they're saying, see the chart below. And this is what your pin bar would look like at your zone. All right. So you always want to buy, you want to see price buy to sell, right? So price sold, we got a pullback, which sent price into a buy, right? And then price sold. So you always want to get in on a pullback. You never want to get in on a low, right? Price already started selling up here. Price came underneath the zone. And then you got all of these candlestick patterns, right? We got a bearish engulfing, and then we got another bearish candle that was like, okay, well, price came underneath our zone, but you don't want to enter just anywhere, right? We want to wait on a pullback and then we want to continue because we don't want to have big stop losses. We're not doing analysis yet. We have about 20 more minutes left in our beginner course. We do that for an hour and then we go into analysis, okay? So if you understand the psychology behind this price action pattern formation, you will be able to predict what is likely to happen in the future, and you will make good trades based on high probability pin bar signals. All right. Trading the pin bar candlestick with the trend. If you are a beginner trader, yep, this PDF is free. It's in the Discord. The Discord is free. Click the link in my bio. If you are a beginner trader, I highly recommend you to stick with the trend because pin bars that occur in trending markets offer good trading opportunities with high risk to reward ratio. When you master trading it with the trend, you can then move to range bound markets or even counter trends. And you can, but I would suggest you don't, right? This is why I mark up everything so that I can trade the charts that's moving versus trading the charts that are range bound or consolidating, right? It's not giving you any new highs or any new lows, right? I'd rather just leave that alone and then go to a trending market, okay? All right, and again, as you can see, price was selling. Price came back into the zone, and in this one, they showing a fair value gap, which is perfect. So remember, you want to wait on that pullback to your gap, and then you want to enter for a sell, okay? The figure below shows how this price action signal works if it is traded with the trend. As you can see, the price was rejected. All right, price was rejected. The trend was a sell. Price continued lower. Price was ejected from the zone level, which indicates that the bears are still in charge of the downtrend. The formation of the pin bar indicates the end of the retracement move and the beginning of the impulsive move at the resistance level in line with the downtrend. This is a high quality setup because all of the following criteria are respected. The pin bar is well formed, okay? It was formed in the zone. It is within line with the direction of the market. The rejection occurred in a major key level, which represents a hot point in the market. The risk to reward ratio is good and it is worth trading. Sometimes, even if the market is trending, we can't draw our zones because price moves in a certain way which we can't spot static key levels. I disagree with that. That's why we don't draw support and resistance. That's why we draw our fair value gaps, okay? So they're saying that they can't spot certain key levels because they're looking for equal highs and equal lows, okay? We rely on our gaps for our levels. If you are in this situation, you can use the 21 moving average. I'm not going to read that because we are not using moving averages. So we are going to move on. Moving average. All right, so we are going to stop there and we will continue on trading tactics tomorrow. And what we're going to do now is I'm going to go over to UJ in a study chart. And we are going to identify some pin bars at our fair value gap areas, okay? So we'll start on the daily since we're here. All right, and I see one right here. We have a fair value gap here. Price came back to 50% of the gap, and then it traded up 80 pips. This is another reason why I don't care to enter on the higher time frames, right? But this is showing you if you set price at your 50%, right, you'll have a bigger stop loss for sure. It's 162 pips, but price went up way more than 162 pips, right? If you're entering on these higher time frames, then you are swing trading, okay? So I would say, because we have a gap here, this would be TP, okay? We have no gaps here, we no gaps here, and this is where we entered. So if you just entered price here, set your limit at 50%, and then you take price here to that gap, you're in this trade for 15 days and you caught 418 pips, okay? So that's a pin bar on the daily. Let's come down to the 4-hour. Let's see if we can find any pin bars on the 4-hour. All right, so this one is representing, I just know I had a gap here. Hold on. Where was I? Okay, here. All right, so we have our gap here. Price came back to 50% at the T. So remember when she said that you'll have some pin bars to where your body won't be all the way near the end, right? This one is almost a doji, but not quite because it's not near 50% of this candle, right? And the way you can tell that, you can use your rectangle. You can go from high to low, all right? And then that line right here is 50%. So price is underneath 50% of that candle and price closed red, okay? So this is why she was saying you can track if it's a bearish or it's a bullish by the way that the candle, the color of the candlestick, okay? So remember my pink candles are bearish, right? So price traded up to our zone and then it rejected. Price closed under 50% of this candle. So it's not just a regular doji. This is a bearish pin bar, okay? And then as you can see, price traded below. All right. So even on your 4-hour time frame, if you want to set these limits, you can. You just have to remember that you're going to have bigger stop loss. All right. And then you can just take TP back at the lows. Okay. This one continued to run a little lower. But again, you could have found another entry here. We got another fair value gap. Okay. Let's go down to our hourly and let's find a pin bar there. All right, so I know you're eyeing this candle right here. I want to measure it to see if it closed above my 50%, and it did. So this is technically a pin bar, but price did not come to a fair value gap. We do have our fair value gap here, right? And price left us a doji, right? But long as it reacts at our 50%, that's really what we mainly want to see. We want to see rejection at this 50%. So as you can see, price still did go higher and it never came down to hit your stop loss, okay? Stop loss is at the low of the candle that created the fair value gap. All right, so here we have our fair value gap. This is another example of the candlestick color, okay? So this is a bearish pin bar, right? But as you can see, price did not hit our 50%. This is what we call inducement. If price doesn't hit the 50%, I don't touch it until it does. Even if price didn't come back up here and touch it and just trade it lower, this would have been a trade that I would have looked for another gap for price to react to, okay? But in this case, price did come back up. But price left us a pin bar, but this is not a bearish pin bar because price closed black. The candlestick closed black instead of pink. So that makes this a bullish candle, okay? So that's another thing of what they were saying about the color of the candle, okay? All right, we got another gap here. All right, price didn't hit it, but this is what I was saying. If price doesn't hit my 50%, I don't care if price continues. I'm not touching it until I get a valid gap. Now here, this is called a new week opening gap. This is where price closed Friday. This is where price opened Sunday. Okay, if you follow my cross point all the way down, it shows you the date and the time down here on the bottom, right? So that's Sunday, May 11th at 1700. All right. And this is Friday, May 9th at 1600. So I will mark up this gap, right? So from here to Sunday, and look, price came back to 50%. And then we could have got our entry and continued higher, okay? You're welcome. Let me know if you have any questions. We don't use EMAs in here. Is it breaking structure? The breaking structure where's the money is. Yep, we love breaking structures. Any time frame. Okay, so now, let's see. What else do we have? Again, we got a fair value gap here. Price came back to our 50%. Not necessarily a pin bar, right? Not necessarily a pin bar, but the candle did close bullish because the color is black. So that let me know that price is going to continue higher. All right, so we can come off the 1 hour. We did a couple of examples there. Let's go to the 30-minute. This is what I mean by it doesn't matter what time frame you're on, as long as you know the structure that you're in on any time frame. Can I explain liquidity more? Yes, I can. All right, so we have another gap here. Price did not come back to 50%, but it did eventually there. Okay. All right, so liquidity. Let's find a liquidity area. So you can define liquidity as equal highs, okay? And they have to be exactly equal, okay? So sometimes you'll have two wicks that's exactly equal. Sometimes you'll have a double body candle that's exactly equal. That's liquidity or consolidation. So I'm going to go to odd cat because I was literally just liquidity on that. So I told y'all I called a sale and then I was like, well, price came on top of my area that I was looking for and then it bought. Okay, so we're going to do a top down on odd cat real quick so that I can find that liquidity that was ran. Okay, so my top down start on my monthly. I look for price to run either last month's high or last month's low. Price has not ran last month's high, but we are really close to it. It has to be within 100 pips for me to mark it up. All right, and this is 49 pips. So I'm going to mark last month's high. All right. So a high is also a liquidity area, right? If price runs this high, runs this liquidity, then I want to see price pull back. So this is another liquidity area. Highs and lows, equal highs and equal lows, and consolidation. Okay. All right. So now I'm going to come to my weekly and I'm going to mark my weekly CRT. My weekly CRT stands for candle range theory. Candle range theory just says that every candle trades back into the previous candle, right? And if it doesn't, then we get a gap. Okay. So as you can see, this is a previous candle. Price ran that high, which is the liquidity. Zoom in. This is our previous candle. Price ran that high, right? You see that? And then price came back into the candle. So we just want to trade price back into 50% of that candle's range. Okay. So that was a run of liquidity, that run of high. So now here we are looking for price to either get up to our monthly or come down here to our weekly low. So now I'm not going to mark my weekly high because my monthly is right on top of it. So I'm going to mark my weekly low, and my weekly CRT is black and my monthly is red. Okay. Then I am going to mark 50% of last week's candle, and I just use my rectangle and I go from the high to the low. Okay. My rectangle, if I double click it and press style, my border is on 0% opacity because I really don't need the outline, but this is what it looks like if it has the outline. You see it has that black line. I really don't need that. Only thing I need is 50%. So I put this on 0%. All right. I don't need the background. All I need is my middle line. So my middle line is the only thing that's checked. And then of course it's on 100%, and you can put it on whatever color you want to use. All right. So I use this to measure my 50% of my candle for my CRT range. And I also use this to measure 50% of my fair value gap. Okay. All right. And I like to make sure it's accurate. So you can see that it's accurate. When I put that line on there, my purple line disappears. This is why I like to have it a different color. So see, if I put it underneath, I can still see that purple line. If I put it too far above, I can still see that purple line. I need it directly on top. So therefore I can't see that line anymore. And then that shows me that that is 50%. I delete my rectangle because when I go down to a lower time frame, I don't want to. Now this is playing with me. Because wasn't it right on top? Okay. So I delete my rectangle because I don't want to go down to a lower time frame and then press an area on the chart and then it moves it. Okay. And then you can even go one step further and click these lines and lock them so that when you get to a lower time frame, if you accidentally come into an area and try to move it, it won't move. Okay. All right. So now we have our weekly CRT range marked up. Excuse me. I'm sorry. We have last one's high marked up. And then over here, I noticed that price gave us a fair value gap. So I noticed that price came underneath the gap and now it's on top of it. But I want to see where we are from 50% of that gap. So I just want to see. Okay, so this is 50% of that gap. Price is well on top of it. So I don't want to worry about it. I'm going to delete it. All right, so now I'm going to come to the daily, and these are my current zones. Within this daily chart, I want to see, do I have any trend lines or any other fair value gaps that I need to mark up? There was a fair value gap here, right? But price has gotten on top of it, so I'm not going to worry about it. I do see a trend line that I'm going to mark, so I have rejection here, okay? I have rejection here, but then I also have rejection here. So I'm going to use this point and this point for my trend line. All right, and I have my magnet tool on because I feel like it's easier with marking a trend line. All you have to do is find your two rejection points because you need two rejection points for the trend line to be valid. Okay, and I just move my candlesticks over the points, that's point A, that's point B, and then it maps it out for me, okay? Now I'm going to come down to the 4-hour. All right. And I'm going to see what else do I have here on my 4-hour. As we can see, we had consolidation, and then price gave us an impulsive move, and that impulsive move left us a gap. I'm marking up the wrong pair. I'm marking up odd cat. I'm supposed to be marking up odd CHF, but we're going to finish this markup, okay? So I did buy odd CHF. We are currently, I'm sorry, odd CAD. We are currently in this trade, and I'm going to just cover my position size. My stop loss is in profit. Yeah. That blue line is entry on odd CAD, okay? I don't know if y'all can see it, but we got in here at this gap here, okay? I want to do odd CHF because odd CHF had an area of liquidity. I don't know how I ended up marking up odd CAD, but this is our top-down analysis, so we're going to keep going, right? This was our entry here for this buy here at this gap. And remember, I told you when price give us these gaps, that is the market makers telling us where price wants to go. Okay, when price gives us these impulsive moves, all right? But 90% of the time, the market is going to respect the gap and then continue into that area. You have that other 10% where price is going to trade through the gap. So let's say this price kept coming down. Price is going to trade through the gap and then come back and retest the gap and then go lower. Okay? So we use our fair value gaps to let price know if price is going to continue higher or to let us know if price is going to continue lower. So either way, as long as you wait for price to come back to these gaps, you have a higher probability chance, okay? A higher probability chance, yes. All right, so now I'm just waiting on this trade to play out. So I'm going to go to odd CHF, the one that I meant to mark up. I was wondering where my liquidity was, so I can show you where liquidity is, okay? All right. So I'm going to start back on the monthly. All right, and I look to see if price ran. Do I trade gold? Yes, I trade gold. I mark everything up. So I look to see if price ran a high or a low. Price has not ran a high or low. Current price is here at this dotted line. I want to see if we are 100 pips within our low or our high. This is 300. This is 200. So no, we're not. There's no trend line that I want to mark here on the monthly. So there's nothing I want to do with this monthly. Now I'm going to come down to the weekly, and I am going to mark up my fair value gap. I want to see where price is within this weekly fair value gap. All right. So price just traded to 50%. So I do want to mark that up. My fair value gap lines are purple. Okay. Now I want to mark up last week's CRT. It's just last week's weekly candle. Okay. I want to mark up the high of last week's candle, the low of last week's candle, and then I'm going to use my rectangle to go from the high to the low and mark up 50% of last week's candle's range. All right, and I like to use my magnet when I'm doing my highs, my lows, okay? Because if you can see, price just like grabs on to the wicks. So you see, when I go here, it just grabs onto the wicks, or it'll grab onto the body. So it just gives me more accurate. You see how price is just jumping? See that? The name of the game with trading is accuracy, okay? So these zones have to be accurate for price to correctly react at them, okay? All right, so I have my high, I have my low, I have my 50%, and then I have 50% of this fair value gap here. So now I'm going to come down to my daily, and I want to look again for any more gaps or any more zones. And we had a gap here, but we already have our 50% marked up, so we're not going to worry about it. And then I could, mark up this gap in case price decides it wants to come to the upside. This is where I would look for it to go to. All right, and I use my magnets when I'm marking up my fair value gap. So if you can see, when you mark up a fair value gap, you go from the previous wick to the candle after it wick, okay, to mark up your gap. And so I have my magnet tool, and it just grabs onto that previous wick and then just go over to the next candle, and it'll grab onto that, okay? All right, so if price decided to buy on me and come outside of my weekly zone, this would be an area that I would look for a TP, okay? All right, and then I don't necessarily see anything as far as the sell fair value gap. Now I'm going to come down to the 4 hour. All right, and so price has rejected our 4 hour zone. So, like I said, I was in sales. All right, this is our liquidity consolidation. Okay, so highs, lows, equal highs, equal lows, and consolidation is liquidity. This is all CHF. So what you want to do when price comes to consolidation, okay, we had consolidation at this zone. You always want to wait for price to run liquidity. And we can come down here to the 1 minute, okay? This is consolidation. You see it a little better here on the 1 minute. This was our run of liquidity. Now, I was like, okay, price came and closed on top, and then it left me a gap, right? It broke all of my consolidation areas. It left me a gap. Price came to it and then traded higher. And then price decided I want to trade below it. So that was our run on liquidity. So we can still enter sales on odd CHF because, as you can see, price has started trading sideways. Okay, now we want to see price pull back up to our gap that broke our structure, right? So this is our last point that took us to our last high. Okay, this was our break of structure. This is our fair value gap that we want to see price pull back into. All right, so I am looking for an entry on a sell right here on AuddCAD. And whoever asked about that liquidity answer, let me know if that made sense. If not, we will look for another example, okay? All right, but I'm looking for price to come back here, and then I'm going to trade it to last week's low because I currently don't see any other gaps beneath price that I would want to take it into. All right. Let's see this one. Okay, so actually I will take it into this hourly fair value gap. So, and the reason why I want to take it into this hourly fair value gap is because we got inducement here. I don't want to guess and say that price is going to come here and then price stops here and then it trades higher. This is going to be a guaranteed TP. Okay, this is going to be a guaranteed TP. It's an easy 40 pips, and the risk to reward, right? This is our 50%. Our stop loss is going to be above that wick. TP is going to be here. The risk to reward is 5 to 1. It's a good risk to reward, although it's only 40 pips. Sometimes you don't want to look at the pip amount. You want to look at your risk to reward amount, right? We don't want to trade 1-to-1s. And we barely want to trade 1-to-2s, right? We want 1-to-3s or higher. And that's because when you have 1-to-1 trade, right? Let's say you win $50, but on your next trade, price hits stop loss. Now you'll lose $50, right? Versus a 1-to-2, your trade hits TP, you win $100, right? But then on the next trade, your trade hits stop loss, you'll only lose 50. So you won't lose everything that you made, and it makes it easier to compound. Okay, so when you have a 5-to-1 trade, that means it takes 5 losses to wipe out all of your profits, as long as you are using proper risk management. Okay, you can't be over leveraging. All right, you can't be over leveraging. This is an 8 pip stop loss. So if you have $100, you can actually use $1, right? So if price hits stop loss, you would only lose $8. And if price hits TP, then you will make $41. Okay. So your risk management depends on your risk to reward. Okay. So if you have $100 in your account, you can't do like a one lot, but I think you could probably do three, depending on your leverage size. So, 3 times 8. I know 3 times 2 is 16, and then 8. So that's $24. You would lose $24, right? So you want to make sure. I say a lot of people always, they only calculate what they're going to win versus what they're going to lose. You want to focus on what you're going to lose and not what you're going to win, right? Because if you win, it's going to take your account in the right direction anyways. But if you lose, right, you want to manage your risk. So if you lose, then you know how much you're going to lose, and then you know how to recover from that loss. Okay, versus when you're over leveraging, right? You're going to lose too much, and then you're going to be trying to dig yourself out of a hole and continue over leveraging. Okay. So, this is why risk management is important. So, although you have $100 account, it's only an $8 stop loss. You can do $1. You don't have to do 10 cents, right? Because you'll only lose $8. Now, they say don't risk more than 10% of your account per trade. So 100 times 10%, I'm sorry, 1%. They say don't risk more than 1% of your account per trade. So 100 times 1% is $1, right? So we are being a little bit riskier with this trade, with doing $1 and losing $8. But what's $8 to $100 account, right? Now the difference is when you only risk 1%, then that means you're only risking $1, and you have 100 trades that you can take before you lose the account. Now with the $8, you only have 12 trades that you can take before you lose the account. Okay. So before you become risky, practice the strategy. Okay. The system works, the setup works. Just practice that. Okay. Before you become risky. All right. So I'm just going to set my alert here because I want to wait for price to get back here, and then we will enter this cell. All right, so now I'm going to, this is on my study one. I'm going to go back to my main watch list, and we're just going to go through everything that we marked up this morning. All right. And I'm normally on here until 11, so I'm just going to delete and remark up, okay? All right, so this is Euro USD. And I'm sorry, let's start with the dollar. Let's start with the dollar. Let's see what the dollar's doing. All right, so this is the dollar. If you don't know, you can compare the dollar to Euro USD. So Euro USD is called a cross pair, and that means that price is trading against another pair. So the euro is in the front and the dollar is in the back, right? Euro USD. So when the dollar is buying, that means that Euro USD is selling, okay? And when the dollar is selling, that means Euro USD is buying. So Euro USD is going to do opposite of what the dollar is doing, okay? And then you can take it one step further and you can mark up Euro USD, you can mark up the dollar, and then you can mark up Euro alone, which is a futures pair, okay? All right. So you can mark up all three of those charts and then compare them to see what is going on with EU, okay? All right, so we're going to go to the dollar. Hello. If y'all can do me a favor and tap the screen, can we get this to 5K? Okay. So we're going to go to the dollar and I am going to look at my monthly. Remember, I only want to mark my monthly high or low if price is within 100 pips from the high or low, or if price has ran the high or low. Okay. So this is our current price, this dotted line here. And my low is down here. We're 200 and something, 2,000, not 200, 2,000 and something pips away. Okay. The dollar pips run a little different. So I'm not going to worry about my monthly though. All right. I'm going to come to my weekly. And we currently see that price filled this imbalance. Okay. So fair value gaps are also called an imbalance. What's the average profit margin terms of consistency? I don't understand your question. What's the average profit margin terms of consistency? What's the win rate? Is that what you're trying to ask? Okay, so price came back into this gap. When price fills 100% of the gap back to that wick, that is called an imbalance fill. Now, I still want to mark this gap because I want to see if price is on top of the gap or if price is going to retest the gap. As you can see, price traded up, price filled in the gap, right? And then price came underneath it. So I still want to mark this gap because it's a higher time frame gap. Price could come back and hit it again, okay? Now I'm going to mark last week's CRT. It's just last week's candle. This is this week's candle. I am going to mark last week's low, last week's high, and 50% of last week's range. How about the fair value gap above? This gap right here, be glad, are you talking about this gap right here? The monthly one, this gap up here. Yes. Okay. So this goes back to we want to measure it, right? This is 5,000 pips away. We're not worried about it until price gets closer to this area. This is why we use our weekly CRT range to show us current price. Okay. So price is currently trading in this range. If price comes below this range, then there'll be a gap somewhere down here for price to come to. And if price comes outside of this range, then there'll be a gap somewhere here, right? But we're so far away from this monthly gap up here, we don't want to worry about it, right? You'll be holding the trade for forever trying to get up here. Like price, oftentimes this just doesn't go straight up, right? Although we see here on the monthly price is going straight up, but if we come down to our weekly, we'll see that price came here, came here, came here, came here, 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 right? It zigzagged its way up, okay? So we're so far from this gap, we don't want to worry about it. Okay, this is why we mark our weekly CRT range, which is last week's range, and we worry about what's currently inside of this range and then any gaps that's near this range, okay? Does that make sense? Yes, okay. I used to be like you. Now, overextending TPs is a thing, right? Like we see that monthly gap up there, and it's like, okay, yeah, price is going up here. I'm gonna just wait and hold, and then you'll be in profit, out of profit, in profit, out of profit. Next thing you know, 500 days then passed, and then your TP might finally hit, right? All right. So this is why we use the weekly CRT to give us our zones, right? And it helps us to see our current price action and where our current what is called point of interest, right? Where we want to enter and exit the markets at. Okay. So we got our high, our low, and then 50%. All right. And I'm going to delete that rectangle. Now we're going to come down to the daily. Okay. And what do we see? We see our impulse, and then we see our retrace, right? Filled that gap, and then price looks like it's trying to move lower. You want to know what's her CRT? CRT stands for candle range theory, okay? So it's basically every candle trades back into the previous candle, okay? So if we come here, I would consider this my previous candle. As you see, this next candle traded into that one, okay? This is my previous candle. As you can see, this next candle is inside of that one. So that's what CRT is, candle range theory. And we're just trying to trade the candle back into 50%, right? But the candle has to come underneath that high or that low and then trade back into it for it to be valid, okay? So that's what CRT is, candle range theory, okay? So that's why I mark up my weekly, right? And as you can see, we already got our first step, which is price trading outside of the range and then price coming back into the range. And then after price comes back in the range, I want to see a break of structure, right? And then after I see a break of structure, I want to see price pull back to the gap that broke that structure. But we'll get more into that as we go lower and walk down our time frame analysis, okay? All right, so we're from our weekly to our daily, and I see a gap right here on my daily. Okay, so if price is going to come outside of my range, I want to see it come here. All right, and price traded outside of my range. It came close to my 50%. This is what we call inducement, when price comes close to it but doesn't quite hit it, okay? Now we'll come down to the 4-hour. All right, and I have a gap here on my 4-hour that should send us lower back to our, what was that, daily fair value gap. Hello. Now, on this circumstances, this is why we wait for our break of structure and our retest, right? So remember I said we had step one, price traded outside of the range. Yep, it's going on YouTube. Price traded outside of the range, and then step two, price came back into the range. So let's come on the hourly, right? So now for us to have a break of structure on our hourly, we have to find our last low or our last high. Last low or last high. This was our last low, okay? So we're going to follow this last low on up to here. This was our structure point that took us to this structure point. So technically, we don't have a break of structure yet. Even if I come down to the 30-minute, okay? Even if I come down to the 30-minute, it's still the same structure point. All right, let's see on the 15-minute. Okay, on the 15-minute, 15-minute structure. This was our last low. This was our last higher low. And look, inside of a gap. So now we'd wait for price to break structure, which it did. Price broke structure, got on top of our last structure point, and it left us a fair value gap. So technically, this would be valid right now for a buy. Now, my only thing with buying this, where were we? On this 4-hour, right? Price had this 4-hour gap. It rejected once, and then it came back into it and rejected it again. And then it came down to our structure area, right? So this is trying to tell us that it wants to move higher because it's not breaking any of our lows and it's respecting our gap. Okay. So this is telling me that the dollar wants to come higher. So that means that I want GBP, USD, and Euro USD to come lower. Okay. So now my other point of interest is this gap here. Okay. This gap here and this purple line here, which was what gap? Our weekly gap. Okay. It'll just be a retest of our weekly gap. All right. So then I want to see price come here or here. Okay. And once price comes into this zone or this zone, then I want to see price come lower and come into this gap. Okay. So it looks like we got a valid entry for a buy for price to continue higher on the dollar. So now we want to go over to EU and see how can we get in for price to come lower. Okay. So we're going to come to our monthly. All right. And I'm going to see if price is 100 pips from my high or low. Price is 345 pips from my high. And I know it's closer to my high than my low, so I'm not going to measure that. All right. And I do have a trend line. I got rejection here and rejection here. All right. And you see, I just extended and price is currently on our trend line. Now I'm going to come to my weekly. Here on my weekly, I see that we have a fair value gap. Of course, I'm going to mark it, regardless if price has traded through it, right? Because when it's on, we're on Euro USD. When price is at like a higher time frame, your weekly, your monthly, your daily gaps, price is always going to come back and touch it. It's always going to come back and touch it. So I still want to mark it up, okay? All right, so now I want to mark up last week's high, last week's low, and 50% of last week's range. All right, and our TP that we're looking for is our 50% zone, okay? If price comes underneath this zone, what we need to see is another fair value gap and another pullback to the zone and then rejection so that we can continue lower, okay? All right. Did I delete the rectangle? Okay. Now we're going to come down to the daily and we just want to see is there any other gaps or any other trend lines that we want to mark. I don't see any other trend lines. I do see a gap right here, but we have enough price action, enough zones right in this area. So I'm not going to mark 50% of this daily. Now I'm going to come down to the 4-hour. And what do we see here on this 4-hour? A pin bar candle. Okay. Price rejected it once, left a pin bar, traded underneath it. Price came back to this trend line, left the pin bar, traded underneath it. Now, price came back into this fair value gap here. I'm only marking this up because this is where current price is, and this is what current price is showing us, right? So I'm marking it up because current price has rejected it and is right here. now. Okay. All right. So now I'll come down to the 1 hour. And remember what we wanted to see? We wanted to see price trade outside of our CRT range, which we got that. Then we wanted to see a break of structure. Now, I'm not going to go with this hourly break of structure because my last structure point is here, right? This was my last little pullback and really here, right? That took us up here to this high. So now I want to go down lower on my time frame and find a minor structure area, okay? And my minor structure area, I have a pullback here that led here, and then a pullback here that led here, and then a pullback here that led to our last high. So on our minor structure, this was our break of structure here. So we got our break of structure on our minor time frame, and in order for it to be valid, price has to come back into our range. So we got our break of structure, price came back into our range, price pulled back. It didn't quite fully touch our range again, but it did reject and trade lower. Okay, so now we finally have our fair value gap. All right. What zone was this? Okay, so this is our trend line right here, this purple line right here, which I should probably make my trend lines a different color. Let's do blue. Okay, so price is currently on our trend line, right? We really don't want to just enter, although we have our gap, we have our break of structure, we have our couple of confluences. We have 3 confluences. Price came out of the zone, price broke our structure, okay? Price left us a gap, price came back to 50% of the gap. Now I want to wait for price to come underneath this zone because it could consolidate at this zone for a long time and then price could push back up. So I want to wait for price to come underneath this zone, and then I want to come down to my 1 minute and I want to look for another break of structure. Okay. On the 1 minute is showing that price came underneath the zone. All right. On the 15-minute is showing now that price is trying to trade underneath the zone. Okay. So now I want to come down to the 1 minute and I want to see my break of structure. So this was my last high. Okay. This right here, this red candle right here was my pullback to lead to this last high. So now I want to wait for price to break my minor structure and leave me another gap. Okay, which it looks like that's what we possibly getting right now. So it's 10:54 Eastern Standard Time. EU, this is out of session for EU. Okay. But sometimes, you can get good entries outside of session. All right, so now I want to just wait to see if price is going to break this structure and leave me a gap, okay? When price leaves me a gap, then you wait for price to come back into the gap and show you your rejection, and then you can get in, okay? And then you also have this gap right here, right? You can also just wait for price to come underneath this gap. You can wait for price to break this structure, right? Right here on the 15-minute, because this pushed us up to our last high. Come underneath this structure and then come back to this gap. Then your entry would be here and your stop loss would be that wick there. And then TP will be your low from last week. Which will fill our new week opening gap. All right, and it's a 3-to-1 trade. 18 pip stop loss with a 67 pip TP, okay? This is Euro USD. So let's go to a JPY pair, which is in session. All right, so we're in GJ. I'm already in GJ. Price gave me this big bullish move, right? So let's delete it and let's see if we can get y'all in this GJ buy. Okay. So we're on our monthly. The only thing about GJ, right? GJ has ran last month's high. So I am going to mark last month's high. All right. And my monthly line is red. Okay. Now I am also going to mark 50%, right? Because now I want to catch my monthly CRT and possibly my weekly. Okay. It just depends on what price is showing me. So I have my 50% set and I have last month's high set. All right. Now I'm going to come down to my weekly and I'm going to mark my weekly CRT. And my weekly CRT is saying that price is possibly going to move back up. And remember, we want to see price come outside of our zone, come into our zone, break our structure, and then price pull back to the gap that broke our structure. So what I'm trying to catch this week is for price to pull back to the zone that broke our structure, and then hopefully we'll get an entry to take price lower to our 50%, okay? Ma'am, what's the matter? What's wrong? Come here. What's the matter? I'm sorry if y'all heard. That's my dog, Kaya. All right. And here's Kaya. Say hi. Hello. Hi. All right. So now I am going to mark last week's high. I'm sorry, last week's low, last week's high, and 50% of that zone. Okay. Sienna, take Kaya out. All right. And then I'm going to come to my daily. And within my daily low and my 50% of my monthly, I have a gap here. So I am going to mark that up because that's a significant area in price. I don't see any other areas. Nope, I'm lying. All right, I see a fair value gap here. Which price rejected once, and it looks like price is trying to reject it again. All right, now I'm going to come down to my 4 hour. All right, and this is why I bought, right? Because I had an impulsive move, a retracement, and now I want to see price come back higher, come back near our monthly zone, and then price came into this 4 hour gap here. Okay. Jay, I almost blocked you for that. Not trading with Kaya. My name is Sierra. It is on the screen. Okay. You're trading with Sierra. If you traded with Kaya, whoever Kaya is, you can go to her live. Okay. All right. So we bought here on this 4 hour gap and it gave us this impulsive move. So somewhere within this gap, somewhere within this impulsive candle here, it looks like price should have left us another gap. And as you can see, it did. All right. Now, where can we get y'all in this trade? All right. Here. Nope. I said here, right? And then I was like, no, because this candle's still open. So this technically is not a fair value gap, okay? Price came to this gap here, and it looks like it's trying to give us a pullback. If it gives us a pullback, we want price to come into this minute impulsive candle, okay? And this is where we want y'all to enter into a buy at. All right? So this minute impulsive candle, and then you'll take price to, on this one, we're not just going to take price to the 50%. So I don't know if you remember, but I said I'm looking for my monthly CRT setup and my weekly CRT setup, right? So this is my weekly CRT setup here, right? That's weekly high, that's 50%, that's weekly low. Price came outside of the weekly low. It broke our 1 hour structure. It created a fair value gap. Price came back into the fair value gap. Normally our TP would be the 50%. But remember, our monthly CRT line is red, right? So price came outside of our monthly CRT zone. It broke our structure and it left the gap. So this is where I want to see price come to. And then I want to see price reject from here so that we can get our monthly CRT trade, okay? So this is going to be TP, 50% of this hourly candle, okay? So we're going to wait on this entry here for you guys for GJ, okay? And we're going to sit here and watch this price action. And I'm actually going to, well, I was going to go and use the restroom, but I don't like how that candle's moving. I don't want y'all to miss it. So I'm going to wait. All right, and then odd CHF is also near our entry. All right, guys, so I want y'all to see on GJ the importance of letting these candlesticks close. I don't care if you're on the 1 minute, the 1 hour, the 4 hour, right? It's important to let these candlesticks close. Hi, Sierra. How do I get your signals? Do you have WhatsApp? I have a Discord, and the link is in the bio. I'm currently doing a promo. First 30 days are free, okay? But just know on that 30th day that your card will automatically be charged, all right? So if you don't cancel it within, you will be charged. But the link is in the bio. So there's a free Discord group for our learning session for students. And then there's a Signals Discord group, okay? The Signals is $47 a month. All right, so I'm going to cover up my lot size on this, but I want y'all to see my entry on EU. Right there at that rejection. Right there at that 50%. Majority of the time, I'm getting in at the 50%. Okay? Now, this is where we follow our gaps, right? So if price doesn't come here to this gap, then we'll come back on this higher time frame, and this purple line is also a gap, right? So then we can wait for price to get on top of this and then retest it and take it here, which is still a decent amount of pips, okay? It's 139 pips. I kind of like JPY pairs the most now. When I first started trading, I used to hate them, but JPY pairs are like indices, but for currency pairs. They give you the most pips and they move pretty fast. What's this pair? It's GJ and no entry just yet, okay? We're waiting. We're waiting for price to give you an entry. All right. Why my line look crooked? That line look crooked. Yes. All right, guys. So to get straight lines, right, I'll use my trend line and I'll place it here. Okay. And you see how it's kind of crooked. You literally just press your shift button. Don't play me. Press your shift button. Shouldn't have to move it. Use my trend line. Hold on. Let me unextend this line. All right. So here we go. Put your line there, right? Price moves, and then you just literally move it towards that line, and you see how it automatically just goes straight when you hold your shift button versus when I do this, it moves. Okay, so shift button and then straighten it up, and you'll get a perfect straight line. Okay, how do I trade commodities? Um, Gold is the only one. Then I'll trade indices. I'm thinking about getting back into silver, but we'll see. All right, so this is some consolidation. So we're gonna let that play out. I will be back. I have to go to the bathroom, and I'm steady sipping my drink. All right, so I said gold is the only commodity pair that I trade right now. At the end of this week, I'm gonna go through and delete some of these because I mark up everything, but I'm starting to see that like these CHF pairs, I'm not really liking CAD CHF. And then some of these pairs, our zones are kind of small. Like, this is 60, it's decent, but at the end of this week, I'm going to go through and figure out what I don't really want to trade. And then I'll add on silver and oil because they give us a lot of pips also. Okay. But for sure, I'm keeping these JPY pairs. JPY pairs pay me every week for sure. And then like GBP odd does me pretty good. GBP CHF, kind of like these GBP pairs. All right, so we're waiting on GJ and we're waiting on odd CHF. Odd. All right, let me look at odd CHF real quick. All right, so remember my stop loss hit on that. It looks like price isn't going to come up here, which is where I really want it to come to. Looks like we're getting a reaction here. To know for sure, I'm gonna wait for a price to either break this structure. Sir, stop that screaming. Okay. I'm either wait for price to break this structure or wait for price to come back up here to this area, okay? Uh, what about natural gas? NG has a lot of gaps on this chart, right? I haven't been able to find a chart that doesn't have a lot of gaps. Now watch this one not have a lot of gaps because I said that. Okay, exactly. So forex.com, we could possibly add that, right? We can add gas in too. The last couple of charts I was looking at, it was so choppy, right? And I hate to look at a choppy chart because then I don't know what gap I'm trading from. So we can add in natural gas. So I'm gonna let this week pass, and then I'm gonna go through my watch list and do some deleting and some adding, okay? And we'll add in natural gas. But for you, we'll go ahead and mark it up while we're waiting for GJ to hit our area. I think I set my alert. Let me double check real quick. Nope. Why is she barking? Can y'all hear my dog barking? She barely barks, so they antagonize her. They are messing with her. I already know it. That's why she's barking at them. Okay, natural gas. We're gonna go to our monthly. All right. And how is gas markup? Is what you call it? Okay. So now I want to see if price is 100 pips within my last month's high or low. Okay, so this is where price currently is. We're 400 pips from the low. Okay, she needs Scooby snacks. She do. We're 400 pips from the low, so I'm not going to worry about anything on my monthly. And then as we can see, price came from this gap right here. And it didn't quite hit 50%. Let me make sure it's marked right. Yep. So it didn't hit 50%, but I'm not going to worry about it because we're far from that gap, okay? Now I am going to mark up this gap here on the weekly, right here. All right, GJ's hit our area. Hold on. Get your trigger fingers ready. I'm already in, so don't worry about that. All right, so now this is where we wait. Price has come to our 50%, but it looks like it's trading through. We may get a full imbalance fill, okay? Or price may come down to this purple line here, which remember these purple lines are our fair value gaps. Okay, and that was an hourly gap. All right, so we want to wait for price to get back on top of our gap. Yes, were you not here when we did our top-down analysis? We did our top-down analysis on this. All right, so what do we have here? We have our pin bar. If price closes bullish, then that gives us a morning star, okay, which is a bearish candle, a doji, and a bullish candle. Okay, you just got here. After we get our entry, I'll go back over it. All right, and now we are waiting for these candles to close for further confirmation. Kaya, hey guys, stop her from that barking. What are y'all doing to her? Y'all know y'all hear me. Every day, 8 p.m. Central Standard Time, unless something comes up. So when this live ends, there's a notification bell. Just click that notification bell. And then I also have a free Discord. And sometimes I alert the Discord, like I definitely forgot tonight. Let me go ahead and send an announcement. I just thought about that. But definitely click the notification bell, okay? And the student Discord is free. Can I send you an invite? Wait, what? Can I send you an invite before the next live? No. I will not search for your name to send you an invite. Click the notification bell, okay, at the end of this live. When this live goes off, there is gonna come up that I've ended, and then there's gonna be a little bell, and it'll notify you when I'm back on live, or you can join the Discord, okay? Yep, for my followers, it'll notify you. Yep, but you gotta click the bell to get a notification. All right, so this is why we wait for those candles to close. So as you can see, price gave us a little pin bar, and then price came back to the gap. It didn't quite close on top of the gap. It rejected the gap, okay? So we're still waiting. Hello, Night Bright. Hey guys, we get off at 11 and we're at 5,000 likes. Can we get this to 10,000 so this can push out to the FYP page and more people can come on and get some free money and also learn how to print their own money, right? Because that's the purpose of these lives, so that you don't have to rely on anyone for signals, right? My whole purpose getting into trading, I started off with signals and I kept losing with signals while everybody else was making money. And I was like, no, I have to figure this out for myself. So the goal is to get to the point to where you can read these charts on your own and you become your own signal and you start making this money by yourself without me, right? That's what I want to see y'all do. And I'm going to show you how to do everything for free. Like, if you just want to pay me, if you want a one on one and you don't want the distraction of everybody else, I do have a program where I offer one to one. Okay. The link is in the bio. If you have a strategy, but you don't know what's going wrong with your strategy, I do offer a 1 hour day trading call. Okay, you can book that, and you'll have 1 hour with me. We'll go over your P&L, we'll go over your entries and your exits, we'll go over how you're marking the chart up. Okay, but if not, I'm here every day for the most part for free, right? So I wasn't here Friday because my daughter, she's a sophomore in high school and she just passed her test for dual enrollment. So now she is also a sophomore in high school and a freshman in college. So this weekend we weren't on because we were out celebrating her. But they'll be gone for the summer in a couple of weeks. So I'll be locked in. And you guys will have me every evening except for the couple of vacations that I have planned over the summer. All right, so now price has closed on top of this gap. Now we have another gap right here that I want to see price get on top of, okay? Because it's nothing worse than getting in and then price rejects another area. Which platform do I use for marking up or to take my trades? I mark up here on TradingView, and I actually mark up on CoinEx. So I use CoinEx to take my trades. The link is in the bio for that broker. I also mark up on CoinEx too, just because I like to be accurate, right? And if you don't know, we're on GBP JPY. If you don't know the prices that are here on TradingView, so like this broker is FXCM, the price for CoinEx may be different. So I like to mark up here to set my alerts, and then I also mark up on my broker just to get a little more accurate with my entries. Why are we waiting on that specific level? Okay. So it's specific. Yep. Thank you for correcting that. Okay, so we are waiting on this level. We did our top-down analysis, right? On GJ. The red lines are my monthly levels. So this was last month's high, last month's 50%. And then we came down to our weekly. My black lines are my weekly levels. So I marked up last week's high, last week's low, last week's 50%. All right, then I came down to my daily and I saw a couple of other fair value gaps that we marked up. All right, so we were waiting on this specific level because we are trading our weekly CRT range. Our weekly CRT is our black line, so this was our weekly low. So with the CRT range, we have to wait for price to come outside of our low or our high, and price came outside of our low. Then we have to wait for price to come back into our range. Y'all let me know if my kids are too high, too loud. CRT is candle range theory, okay? It's just the theory that every candle trades into the candle before, okay? If it doesn't trade into the candle before, then you get a gap, right? So if we look at the candles, this is our previous candle. This candle traded into that candle. This is our previous candle, right? This candle traded into that one, although we still got a gap. This is our previous candle. This candle came back into this one, okay? So that's all we're doing is trying to trade the retracement back into the previous candle, okay? So what we wait for is price to come outside our low or our high of our last week's range. Remember, my black lines is last week's range, okay? So on this one, this is GJ, price came outside of our low, which is our first criteria. Second criteria is price to come back in the range, okay? Range is right here at this black line. Price came back in the range. The third criteria is for price to break our structure. We got a higher time frame structure on this one. This is our hourly breaker structure, all right? Price broke our structure. Fourth criteria is for price to break structure with a fair value gap. Price created our fair value gap here, okay? Then you want to see price come back to the gap. I already got my entry here earlier during market swap. I was in some drawdown or whatever, but I got my entry here, right? So now I'm looking for your guys' entry here, and we're going to take it up to this fair value gap. All right, so that's why I'm waiting on this specific area. So I'm waiting on this specific area, okay, because price was trading back down. And then now we got another impulsive move to let me know that price is going back higher, okay? So here at my fair value gap, now price is starting to consolidate. So when price comes to a fair value gap, you're going to get either three things, right? At a fair value gap, price is either going to trade through it, retest it, and reject it, okay? Price is either going to come to it, respect it, and reject it, okay? Or price is going to consolidate, all right? Which we got a little bit of consolidation here. Now price has closed on top of this area, all right? Now I want to see if I can get a 50% retracement of this candle. When price gets to 50%, this is where you will enter for your buy, okay? So wait on the manipulation. Don't confuse it if you don't really know what manipulation is, right? All right, price came to the 50%. Go ahead and get in, okay? Because this consolidation is accumulation. Manipulation is the run on liquidity, Okay, we didn't really get any manipulation within this consolidation, okay, this accumulation. If we did, price would have came lower than this area before buying. All right, but it didn't. We just got some sideways movement. Okay, so now you'll enter for your buy here. All right, and then stop loss at the low of the candle that created the gap. So it's 11 pip stop loss. And then we're coming up to our higher time frame, back to our hourly. And our TP is going to be this gap here, okay? GJ, yes. All right. All right, so as you can see, price is trying to reject because we had our 3-minute fair value gap here. I didn't come and look on this 3-minute. Okay, this is why I like this strategy though, because what's 11 pips, right? If we get stopped out, then we just look for a re-entry. Okay, stop loss at the low. So you just look at your candle on your broker that created that gap and you put price at that low, or you can put price right here at this structure point, okay? And that's still only, I didn't lock this line, 14 pips, and it's a 12 to 1, okay? Great risk to reward, exactly. Great risk to reward and risk management with these CRT ranges, right? So GJ and Odd CHF was another pair that I was trying to get y'all into. All right, so remember I said I wanted price to come here and then trade lower, but I wasn't quite sure if price was going to continue lower from this gap. So I was like, I'm going to wait for this break of structure to make sure. And as you can see, price kind of did a little pullback. And now hopefully it can push back up to get us in at that gap, okay? So I do have my alert set and we'll wait for that to go off. All right. So we're in a buy on GJ and then we'll soon be in a sell on Odd CHF, okay? Yep, GJ is GBP, JPY. I'm sorry, guys. I'm sorry. So you only trade. I mainly only look for fair value gaps. A lot of the times when an order block is valid, it's right next to a fair value gap. So I mainly only look for fair value gaps over order blocks. It's just how my eyes, I think they're easier to find, right? Like this big gap is easier to find versus this down candle with the up move, right? How do we see gold? Let's go to gold. Gold is one of those pairs that I really need everything to line up before I touch it, right? Okay. So I'm going to delete it. We'll just go ahead and remark it. All right. So we do our, makes sense. You always miss trades because you always mark up your OB only. Yeah. And then sometimes it doesn't go to the order block. It just goes to the fair value gap. So that's why I like my fair value gap. You think gold is a good time? Long TP. Okay, so we'll see if it's long or not. So we're on our monthly. Remember what we're looking for. We're looking for price to either run our monthly high or our low or be within a 100 pip range from our high or low to market, right? So this is way further than 100 pips. It's 255 on the downside, 283 on the upside. This is all-time highs. I don't have any trend lines. I don't have any gaps on my monthly. All right. So now I'm going to come down to my weekly. All right. And I do have a fair value gap here. I don't know if y'all can see it. So I am going to mark up this fair value gap, although price has already traded through it, right? Price traded through it, but it closed on top of that gap. So I just want to mark it up just in case price decides it wants to come back to this area. Now I am going to mark up my weekly CRT range, and my weekly CRT range is just last week's candle, marking up the high, the low, and 50% of the range. Why do I have 48 missed messages? I'm sorry, guys. Hold on one second. Okay. So my weekly CRT range again this is gold. My weekly CRT range is last week's candle, the high, the low, and 50% of the range. Okay. Now I'm going to come down to my daily, and I want to see what is going on my daily. So now I do see a valid trend line, right? I have a rejection point here and a rejection point here. So I'm going to add a trend line. I use my magnet tool and I go from the first rejection to the second rejection, and then I just extend the line, okay? So I'm really far from this trend line, so really not worried about it, but if price comes up to the high, then I do want to see it touch that trend line, so I am going to mark it. I also see a gap here, so I'm going to widen this so y'all can see that gap right here. So I am going to mark this fair value gap here. And my fair value gap lines are purple, my weekly CRT is black, and my monthly CRT is red, okay? All right, so I do see that price came into this gap, right? Which gave us our move down and then our push back up. I'm not going to keep this on here, but I'm just going to pull it out so that you guys can see it, right? Hey, this is gold, all right? So I'm going to delete that because it's so close to our weekly low, and my weekly low is more relevant than this daily gap, okay? And it's only more relevant because price has already ran that gap. All right, so I also see another trend line below. So it looks like price is creating a wedge. So I have a rejection point here and a rejection point here. So I'm going to do the same thing. I'm going to use my magnet tool. I'm going to start at the first rejection, take it to the second rejection, right? So now price is inside of this wedge, okay? So price hit the top, it sold, it hit the top again, it sold down to the bottom of our wedge. Now what we would like to see, right, is for price to come back to the top of this wedge. But for us to have a valid CRT move, price has to trade outside of our weekly low and then come back into our zone. We marked up GJ. What you saying about GJ? We're in buys. All right. So now we have our new week opening gap. This gap right here, right? This was Friday's candle. This was Sunday's candle. Okay. Price has come back to completely fill this imbalance. So this wick right here for last Friday, price has come back and touched that wick. Okay. So we got a complete imbalance fill. And then we can also mark up 50% of that gap. Okay. I'm not going to too much worry about this 4-hour fair value gap because I have this area here. And I want to come back and see what that area was. Okay, so this area was a weekly fair value gap. So really, since that one is ran, I'm actually going to delete this one. And now we have a new area. So I'm going to mark this gap here, okay? Now remember, for gold, for my buys to be valid, right, I need for price to come back and run this low and then come back into this zone. So way that price is moving, okay, it's failed to create new highs, and it came back down to fill our new week opening gap, and price is trying to close underneath our 50% of our last week's range, okay? So it looks like price is trying to move lower. Let's come to our hourly. Okay, so this is what we have on our hourly, right? So price is failing to make new highs. Hasn't necessarily made a new low, right? But price is leaving us a gap. Now remember, this isn't a gap yet because this candle is still open. So I can come down to the 30-minute and here's my gap. Okay. All right. So again, price is failing to make new highs. This high, this area is lower than this area. This area is lower than this area. Price has closed underneath my 50%. It broke a structure point. Okay. This is a structure point here, right? Price did this, came here, here. Remember, that's not a new low because it didn't come lower than this low. So it pushed down and price came lower than this low. So now we got a new structure point, which is a break of structure, okay? And now I want to see price just pull back into this gap. Now, the only reason why I won't enter here is because I have my 4-hour gap here. I need to make sure that price is going to close underneath here. When price closes underneath this 4-hour gap, then you can look for a retest and take it back to last week's low. To be extra safe, take it back to the trend line, right? To be extra safe. Don't assume that it's going to break this trend line and come and run last week's low, okay? So that's what we're looking for gold. Wait for price to break this gap. And remember, I marked this gap up from this wick to this wick, okay? So wait for price to break this area, retest it, and then you can go and take price to this wick, okay? I'm sorry, to that trend line. And remember, we marked this trend line up, right? We can tighten this up, actually. Okay, we got rejection, rejection. All right, so it looks like price, if we mark it up here, price has already broken it. And then if we mark it up here, right, price hasn't broken it. All right. So that's what we have for gold. GJ is giving us some major rejection. So let's go back to GJ. Let's see what's going on. JPY, GJ. All right. All right. So again, price came and it's not closing above our 3-minute gap. GJ took you out? Yep. Here. If you had your stop loss here, it took you out. If you had your stop loss here, you're still in. So now this is where we wait, right? We wait for another entry. This was an 11 pip stop loss, okay? And remember, price rejected our 3-minute gap, which is what took us lower. So now we're just going to wait for price to get back on top of this area, okay? I don't have any other gaps besides this one. This is where I originally entered. If price comes back here and rejects it, then of course we can get back in here. But now we just want to wait. Okay. Now JPY, this is an Asia pair, so it's 1040. So my rule of thumb, if price is 15 to 20 minutes before a new hourly candle, just wait on that hourly candle to close, okay? Because then we could possibly look for an hourly CRT, okay? If price is 15 to 20 minutes before a 4-hour candle close, wait for that candle to close, okay? So we have 18 minutes left on this hourly candle. All right, and it looks like now price decides that it wants to move back up. So let's see if we can get back on top of this 3-minute gap. And that's my fault. So this is why it's important to move between time frames, right? To see about these other gaps, okay? All right, we got a 15-minute gap here. All right, so it looks like price wanted to come down and test this 15-minute gap. All right, so it's rejecting it, it looks like. It's 1042. Okay. My stop loss is here. I need to send an alert. All right, let's wait. It's 1043. We're just gonna sit here and wait on price action here and on CHF. Did she go to the bathroom? All right, so this candle right here is another reason why we want to wait for those 1-minute candles to be closed, because it looked like price was going to get on top of that zone and then it closed and it came beneath it. All right, so price is still pushing down. Where are we? We're in this daily gap. Okay, and it looks like price rejected that daily gap. Check gold. We don't want to do anything with gold until New York session. Okay, but here's gold. Remember, you want to see it come up here to this gap here. But you'll get a better entry on gold during New York session for sure. Okay, so we got our impulse move, we got our correction. Price came back to our last high and then it closed underneath our last high. So just watching, definitely want to make sure that we're going in the right direction because we got this daily gap here, right? Price touched it once and then it looks like it's rejecting it again. So if price comes down and hit my stop loss, that means that it come underneath our gap. Then we want to see price retest the gap and then take it lower here. But price has done everything that we want to see for our weekly CRT, which is come outside of our zone, break our structure, leave us a gap, right? Mm-hmm. All right. So now we're getting some more consolidation. What time is it? It's 10:47. 11:47 Eastern Standard Time. Now, for JPY pairs, right? The better entry time frame will either be London or Asia. And what I have noticed, Asia session, you'll get your entries around 8:30 or 9, and then London session, of course, 3 o'clock and 4. Okay. And then, of course, with New York session, you want to wait on that 9:30 a.m. This is why they say patience, right? A lot of times it's just waiting for price to show you what it wants to do. So we're just gonna sit here and watch. Also, I bought EJ, so we can track EJ too real quick. All right. So price came outside of our zone. I waited for price to come to 50% of my 4-hour range, but then you can also see that price came down into this hourly, came dead to the 50% on the hourly. Okay. Now, what tells me that EJ is going to continue higher is these equal highs here. Okay. So let's see. Where can we find y'all an entry on EJ also? We're going to mark off the same 3-minute gap and wait for price to get on top of it. All right, and then I do want to set my alert for my stop loss. My stop loss is right here because I got in up here, remember? My stop loss was originally here, right at the low of the gap, and then price came and gave me that area. So I tightened my stop loss. All right, and then I just want to come here and show y'all this is what they mean about relatively equal highs. So you see this wick is higher than this wick, right? If the second wick was higher than the first wick, then that means that the liquidity has already been ran and we're not looking for price to come back to this area. But since the second wick is shorter than the higher wick, that means we want to see price come back to the area and run this high, okay? All right, so let's do this. All right, so look what I see on GJ. I see another gap down here. That would take me out of my position. But like we said, we got tight stop losses, so we're not worried about it. So let me go to, I'm on 2GJs. Okay. I want to pull up EJ. And then I also see a gap here. That was inducement. Price didn't touch 50%. I want this to be EJ. This is probably going to be one of those ones where we won't get an entry until London. So if we don't get an entry, it's almost time for me to get off of here by 11. I will be back at 3. Okay? I will be back at, it's 2 Central Standard Time, 3 Eastern Standard Time, okay? I don't too much sleep during the week. I get naps. I be up looking at my phone every hour. Okay, so EJ, we had our 4-hour gap here. Hourly. Here, hourly. Now, was there one below on the 30-minute? I'm just marking up my weekly CRT levels over here on EJ. And we're going to run these two side by side. That's again. What was that? I'll try. I think about that. EJ and GJ. Okay. All right, so we got our low, our high, 50% marked up on EJ. My 4-hour gap. I don't see any other gaps beneath within this range. Price already came into that one. All right, so this is where we are on both 5 minutes. Okay. EJ and GJ, we're not buying or selling yet. We wasn't a buy, but we got stopped out at 11 pip stop loss. Now we are waiting for a re-entry. Hello. Nas, with Nas, you want to wait again for price to show you an entry during London session because this is a London pair. Okay. So right now we're just getting a retracement. I want to see price come back into this gap. All right. To possibly take price up into this daily gap. Okay. So we have this weekly gap here. Right. And price is still on top of that weekly gap. So it could just be a break and retest of that weekly gap, or price can pull back into here. Okay, so you'll mark up Nas the same way. Okay, you'll mark up your weekly high, your weekly low, and your weekly 50%. Now, what we want to look out for on our weekly levels for Nas, because Nas is a bullish pair, I would suggest that you trade buys, right? So you can mark up your weekly on Nas and then continue to do your top down analysis. And as you can see, price came into this daily gap here today, which sent us higher. Okay, I caught this buy here, and then this was my exit earlier today. Now, if you really want to get more sniper with Nas, mark up your 4 hours, right? We have a gap here on our 4 hour that we want to watch for. And then you can also mark up your high, your low, and 50% of your 4-hour candles. Okay? It's better if you do this during London session, okay? And with your 4-hour candles, price opens and closes at 1 a.m. Wait, it's 159. 1 a.m., 5 a.m., 9 a.m. 1 p.m., 5 p.m., 9 p.m. Okay? So with NAS, you're going to wait on your 9 a.m. 4-hour candle to open. Okay? So this is our 9 a.m. candle right here from this morning. So what you're going to do is you're going to mark up the previous candle. You have your high, your low, and your 50%. Okay? All right, so this was our 4 a.m. range. Remember, for the CRT to be valid, price has to come outside the range for you to get your 50%. As you can see, price never came outside of the range, but price did hit our 50% and trade higher. Normally, you will want to see price come back and retest the range, but on NAS, you're not going to get a lot of retesting. This is why I like to trade the 1 minute, okay? So that you can get better entries. All right. So what we got here, price gave us a bullish engulfing, which left us with a gap. Doesn't look like price came back to the 50%. It didn't, okay? But it did come back into our zone. And then it broke another structure area. Okay? So once price broke that structure area, closed on top of the structure area, this would have been one of those trades to where you do enter at the top of the candle, okay? Then you'll put your stop loss here below our last structure point, which is here because price pulled back down and then gave us that run. Now, how do we find our TP? Okay. We come and look for fair value gaps. We had a gap here on our 4-hour. Come back down to our 1 minute. And this was our TP right here at that gap. This was technically a 1-to-1, okay? That was a 1-to-1. Now with NAS, you can do a lot of trailing your stop loss, okay, to gain higher pips. I can't remember how I marked this up, but we caught this buy on live. So if you go back and watch that video that I uploaded today, marked weekly markup, I think that's what it's called, title weekly markup, then you'll see how I marked this up and how we caught that buy, okay? Right now, I cannot remember what I marked up at all. All right, so it looks like price came back to this gap. And what I was looking for, because I didn't quite get a full TP hit, I was looking for price to come into this gap, all right? But I moved my stop loss into profit and I got stopped out in profit, okay? But marking up those 4 hours on NAS, your 4-hour candles, remember 159, so 1700 is 5, 12, 15, 17, yeah, 1700 is 5, 1300 is 1, okay, and then 9. So wait for, let's say 859, get on the charts real quick, mark up your 4-hour range, and then let your next candle show you what it's going to do. UJ, I was looking for price to pull a little further back on UJ. Here's UJ. I had this daily fair value gap here. I want to see price come here. So maybe this is why GJ and EJ isn't ready yet, right? So let's mark up the yen and let's see. So this is why I said that you can come over to the futures chart and mark up your yen. You can mark up euro. You can mark up AUD, right? You can mark up CAD. So this one says CAD dollar. So that's just the Canadian dollar. But yen just says Japanese yen. So I don't have the right one. It should just say AUD. No. Yeah, because AUD dollar is AUD. Okay, so that is the right one. Right? And then the symbols is here. So it's 6A for AUD, 6J for yen, 6E for euro, 6C for CAD, and 6N for NZD, okay? So I want to see what's going on the yen now. All right, I'm pretty sure this is current. Nope, it isn't. So let's delete it. I'm come to my monthly. All right, price isn't near a monthly high or low, so I'm going to come down to my weekly. Price just ran my weekly high, which is something I would like to see, right? I would like to see my weekly CRT play out so that price can trade lower on my yen, and that way price can trade higher on GJ. Okay, so I'm just gonna mark 50%. I'm not gonna mark the full CRT range. Just gonna mark the high and the 50%. All right, so now I'm gonna come to this daily, and I see we have a gap up here on our daily. So now it's like price is pushing up on our weekly CRT range. So it's price trying to close outside of our weekly and come up here to this daily gap before coming lower. All right, so now I'm going to come to this 4-hour. I don't see anything else on this 4-hour. I do see that price rejected our new week opening gap. Remember, this is Friday's candle. This is Sunday's candle. And if I mark this gap up, price came to 50% to a T. So I'm not liking that. I'm not liking that at all. All right, so now I want to come down to my hourly and what's going on over here. All right, so price came down, touched our 50%, and it looks like price is trying to go higher. I have another gap over here. All right, what do we have here? We have inducement here. Price didn't touch 50%, and we have inducement here. So this might just be the area that's going to send us lower. Okay, I would prefer this area versus, do I not have that mark? This right here. I don't have the right color. This gap, okay? So I'd prefer price to sell from this gap than to come a little higher and to come into this gap. So I am going to set an alert here. I deleted the wrong one. Right. And I want to wait for price to alert me here that it wants to come lower, and then that'll send GJ and EJ up, okay? So what we're going to do is we're going to log off. It's 11:10, and our next entry time is going to be the next session, okay? So I will be back at 2 a.m. Central Standard Time, and we will trade the London session and look for an entry. Now, if you are going to watch this, okay, let price come back on top of that 3-minute fair value gap, okay, and then enter for your buy. All right, so we're just gonna let price do what it's gonna do. And UJ, want to see price come down here, okay? Which aligns with EJ, right? EJ, I'm sorry, which aligns with the yen. The yen still has a little more movement up to go before moving down, okay? So we're just going to let price play out, and I will be back at 2 a.m., okay? So I'm going to sign off. Do we have any more questions before I sign off? Y'all set y'all alarms, okay? It's the cost of day trading. Now, what I have noticed though, we got CHF. What I have noticed though is you can have an entry during London, and then price can come back to that entry sometimes during New York session. Okay. All right. CHF has hit our zone, and gosh darn it, it didn't hit our zone, but oh, okay. Well, it's breaking this low. It's breaking this structure point. Mm-hmm. Did you say what about UJ? Did I not answer your question? Or is that old? Did I answer your question? Okay. All right. So on CHF, right? I was waiting for price to come back into this gap here. Price has broken this 15-minute structure. Okay. So now that price has broken this structure, let's see if price creates a fair value gap, and then we can enter in this gap. Price may just break this structure and pull back up here. So you either have here, or you wait for price to create a gap here, and then we'll take it to last week's low, okay? So that's what we have on RCHF. I definitely want to see it pull back a little bit more though. All right. So RCHF, I think RCHF is an Asian pair. Let's see. Oh, it's in New York. Okay, so Sydney, Tokyo sections, the oddest most active. And then similarly, during the New York session, the CHF is most active. As a result, between 1 p.m. and 5:30 p.m. GMT. I don't know what time GMT is. All right, so 1 p.m. GMT is 9 a.m. And then it says 4 is 12, so that'd be 5 will be 1 p.m. So it's better during New York session. So we're gonna hold off on RCHF. All right, and I will be back at 2 a.m. when I get off of this. There will be a bell. Okay, just wait for the live to end, and then there's going to be a bell, and you can click that notification bell, and it's going to notify you when I am live. Okay, set your guys alerts. And we'll be back in the morning to catch these EJ JPY pairs. Okay. All right, you're welcome, guys. You have a good rest of your night. It's only a couple more hours, so take a nap if you need to. Set your alarms. See you later.